Welcome to Talk Tickers. You're here for the key takeaways from Harley-Davidson's Q1 2025 investor call. Right. Well, you're in the right spot. Let's dive in.
Okay, so first quarter for Harley-Davidson. Honestly, a bit of a mixed bag. Their motorcycle division, HDI, actually beat expectations on operating income margin, came in at 12.1%.
Oh, okay. Better than expected. How'd they manage that?
Well, it seems like it was mainly down to a strong product mix, keeping a lid on costs, and also lower spending tied to last year's big touring model launch.
Gotcha. But that's not the whole picture, is it? What about sales?
No, definitely not. The sales side is less positive. Global retail sales took a pretty big hit, down 21%.
21%. Wow.
And North America.
Even tougher there, down 24%. And that was mostly the U.S. market dragging things down. They pointed to low consumer confidence.
Okay. What about other regions?
Interestingly, EMEA, Europe, Middle East, Africa was only down 2%, quite resilient.
Only 2%. That is interesting compared to the global number. Yeah. But then you look at Asia Pacific, APEC, and that was down 28%. Mostly China and Japan, it seems.
Ouch. And Latin America.
LATAM saw a 6% decrease. So yes, softening pretty much everywhere except maybe EMEA holding up relatively okay.
And does that retail softness translate to their shipments to dealers?
It does. Wholesale shipments were down 33% globally, and that lines up with dealer inventory also being down about 19% worldwide.
So they're keeping inventory lean.
Exactly. Deliberately. U.S. inventory was down even more, 23%. But, one bright spot was their financial services arm, HDFS.
Ah, yes, HDFS. How did they do?
Really strong, actually. Operating income there jumped 19%.
19%. Okay, so the financing side is robust. Now, what about LiveWire, their electric brand? We hear the EV market's been tricky.
Yeah, tricky is a good word. LiveWire definitely faced some headwinds. Unit sales were way down, and because of that, they had to revise their outlook. They're now expecting operating losses around $59 million for the year.
$59 million loss. And what about cash burn?
About $49 million cash burn expected for LiveWire this year. So yeah, a significant adjustment downwards.
Okay. And with all this uncertainty sales down, EV struggles, what about their overall guidance for 2025?
They pulled it. Citing the economic uncertainty and the fluidity around tariffs, they withdrew their previous full year 2025 guidance.
Pulled guidance completely. Okay, that definitely signals caution. Let's dig a bit deeper then. That U.S. sales drop, you mentioned they're changing their marketing approach.
That's right. They're shifting a lot of their model year 25 marketing spend, especially the co-op funds with dealers, into Q2 and beyond.
Closer to the main riding season, basically.
Exactly. Trying to time it better, make a bigger splash when people are actually thinking about buying and riding. They called it their biggest co-marketing effort ever.
A big bet on a later push then. What about new products? Anything exciting highlighted?
They definitely talked up performance, specifically this limited edition CVO Road Glide R. It borrows tech from their racing efforts. Very limited run, only 131 bikes, hand-assembled.
131. That's tiny. Purely a Halo product then.
Pretty much. They expect them all to sell out just from pre-orders. It's about, reinforcing that performance image, creating buzz.
Makes sense. Now, this next part sounds like a bigger shift. They mentioned entry-level bikes.
Yeah, this is potentially quite significant. They're planning new, more affordable cruisers, smaller displacements. Plus, they mentioned bringing back an iconic classic model.
Smaller engines, more affordable, aimed at new riders, maybe younger buyers, both U.S. and international.
That seems to be the plan. Starting next year, it's a clear move to broaden their appeal beyond the traditional big, expensive bikes. The challenge, of course, is making these profitable while still feeling like a Harley.
Right, maintaining the brand cachet at a lower price point.
Yeah.
Tricky. Okay, back to LiveWire for a sec. What reasons did they give for the EV slowdown?
They listed a few things. Slower EV adoption overall than maybe they hoped. Also, a lack of government incentives in some places, regulations not always helping, and, charging infrastructure still building out slowly.
So largely external market factors impacting them.
Seems that way. And it's led them to evaluate all options for their LiveWire investment. They were pretty clear. No more investment beyond the existing credit line for now. Focus is on cutting costs to make it sustainable with current funds.
Wow, okay. A real reassessment happening there.
Yeah.
Let's talk tariffs. Always a factor for global companies. What was the Q1 impact?
Relatively small in Q1, just $9 million direct impact on the motorcycle side. But The estimate for the full year 2025 from new tariffs, that's projected at $130 million to $175 million.
Whoa, that's a huge jump. 130 to 175 million.
Yeah, a very significant potential headwind. They're working on mitigation, obviously. They stress their U.S. manufacturing footprint, 75% U.S. components, core bikes assembled here.
But China must still be a problem.
Whoa, absolutely. They mentioned the 145% duty there. That's a massive hurdle. They're watching trade talks closely, as you'd expect.
Okay. Another potentially big item, HDFS, the finance arm. They're doing a strategic review.
Correct. They confirmed they're looking at potentially bringing in an outside investor for HDFS.
Why would they do that, especially when it's performing so well?
The thinking seems to be that the market isn't fully valuing HDFS within the overall Harley-Davidson stock price. So this could unlock value, but they set conditions. Premium valuation, long-term strategic partner, secure funding, maintain service levels.
So get cash for it, but keep the strategic benefits and customer service.
That seems to be the goal. It underscores how vital HDFS is for selling bikes, even if they think it's undervalued on its own.
Makes sense. And are they doing anything else to help dealers, given the sales pressure?
Yeah, they mentioned tweaking some dealer programs, the fuel facility program, the rewards program, trying to support dealer health. And product-wise, besides the new entry-level stuff, they're still innovating on touring and trikes.
And a change in launch timing, too.
Yes, a multi-year plan to shift model year launches to the fall. The idea is to create later selling opportunities. Some model year 26 bikes might even launch this fall to start that transition.
Interesting. Okay, let's quickly recap the Q1 financials then. HDMC revenue.
Down 27%, mostly due to that 33% drop in wholesale volume. Gross margin slipped too, down to 29.1%. Lower volume hurts efficiency there.
But operating expenses.
They managed those well, kept them lower, so the operating margin for motorcycles ended up at 10.8%. And as we said, HDFS offset some of that operating income, up 19%, even with slightly lower revenue. LiveWire revenue was down too, of course.
Got it. What about their cost-saving efforts, the hardwire plan?
They saved $24 million in productivity in Q1, and they now expect to beat their overall hardwire target by 10%.
Oh, good. But wasn't there a timeline change?
Yes, slight delay. They'll hit that higher target, but a year later than originally planned, so now by 2026. Capital allocation priorities remain the same. Fund growth, dividends, buybacks.
And they did buy back stock.
Yep, $87 million worth in Q1. They highlighted returning $1.5 billion to shareholders since 2022.
Okay. Lastly, demand trends. Anything positive looking forward?
Well, they did say April saw sequential improvement in North American retail compared to Feb and March, so maybe a slight uptick.
A glimmer of hope.
Perhaps. But they immediately cautioned about consumer sensitivity to big-ticket discretionary items, the economy, interest rates, all still major factors. And they noted competitors are already discounting 25 models, which Harley is trying not to do, for brand health reasons.
To protect the premium image versus chasing short-term sales. Yeah. Always a tough call.
Exactly.
All right, let's shift gears. Time for our This Is Not Financial Advice segment. Let's brainstorm a wild but maybe plausible trade idea based on all this. You've got pressure on expensive bikes, a move to entry level, and this HDFS review creating uncertainty.
Okay, here's a thought experiment for you. How about a pairs trade? You could go long manufacturers of, say, more affordable power sports stuff. Think ATVs, side-by-sides, maybe budget-friendly or motorcycle brands.
Okay, betting that consumers trade down or look for cheaper fun if high-end is too pricey?
Precisely. If that high-end discretionary spending stays weak, maybe the money flows to more accessible options. That's the long side.
And the short side of the bear?
Short, Harley-Davidson itself. The logic. Their main market faces headwinds. The entry-level success isn't proven yet and is still a year away.
And the HDFS situation adds another layer of what if.
Exactly. The review creates uncertainty. A potential spin-off or stake sale could change the company's whole financial structure in ways the market hasn't fully digested. So you're betting on a shift within recreational spending away from the very high end and acknowledging the specific uncertainties around Harley's strategy right now.
Interesting concept. Betting on affordable fun over premium cruising with a dash of HDFS uncertainty.
Purely hypothetical, of course, just connecting some dots from the call. Remember, this is absolutely not financial advice. Do your own research.
Absolutely. So, to wrap up our deep dive, Harley-Davidson's Q1 showed profitability resilience in some ways, but real challenges in sales, especially in the U.S. Big strategic moves are underway, pushing marketing later, launching entry-level bikes, reevaluating LiveWire, dealing with tariffs, and exploring options for HDFS.
Yeah, a lot is in motion. What do you make of that entry-level push? Can they capture a new audience without diluting the brand? Or this HDFS review, what are the ripple effects if they do bring in a partner? Lots to think about.
Definitely food for thought. We'd love to hear what you think too. Let us know. This has been Talk Tickers, aiming to give you the insights you need, plain and simple.